So I have the camera in my hand. It's not a position I'm used to be honest. I want to take you with me through this trade. So I'm going to show you it right here. I'm not sure if you can see this. So I just took this trade on Nasdaq right here. Now, again, it's a little bit of a different setting. I want to take you with me through this thought process. So right here, we are looking at Nasdaq, and what we are looking at is essentially the following. So there's, of course, since I placed the trade, there's also emotions going through me. So for example, sometimes I might not be that clear on what I'm about to tell you, or I might struggle with some of the words. That's usually what happens when I record a live trade that I have. Again, I need you to understand, there's going to be some emotions attached with it. And that's not necessarily a bad thing. Don't get me wrong, but it's the way you act on these emotions that is important to understand. So for example, if I'm not aware of the emotions, that is arguably worse than if I am aware of the emotions and I can consciously control the emotions, if that makes sense. And that's the most important part to understand. So right here, what we see is that we have Nasdaq, which has a very clear higher time frame, in my opinion, and that is simply to continue higher overall. So for example, to continue towards that high. Where previously we also saw right here that we have this daily fair value gap. That daily fair value gap, we see that we create a rejection from the daily value gap. This is the rejection high from that daily fair value gap. So if we run this rejection high, we are then in turn disrespecting this bearish daily fair value gap. So that means the price has a very easy path, an easy run, an easier, let me put it in probabilities. The probabilities are in our favor right there to overall continue higher than towards the next swing high, if that makes sense. That's important. So doesn't mean it's guaranteed, because right here we also see, okay, well, the bias is now clear. That's checked off. Next, we need to have a narrative area. So what are we going to continue higher from? Essentially determining, because of course, trading is not all about the bias. The bias is the first step. Second step is determining how far we can retrace, because we deal with a stop loss. We are traders. So we have a stop loss in place and a take profit. So we need to somewhat determine accurately how far can we actually retrace before we continue higher, if that makes sense. That is where we have this daily fair value gap. Now, I know a lot of people out there, they wait for the daily fair value gap, and they might be waiting forever because we might never sting back into the daily fair value gap. What is important to understand right here is that we don't need to oftentimes. So what we see right here is that we can potentially trade back into the daily value gap, but we can also already continue higher. It leaves us with multiple options. Now, what my trading plan is and what I essentially do is I refine the different options that we have. So for example, at that moment in time, we can retrace back into the daily fair value gap right there to continue higher. We can also already continue higher right there. It's not that certain. So we can do multiple things, if that makes sense. This is where I like to, again, use the analogy guess who. It's a game where you essentially need to guess who your opponent, who the other person across from you has as their character. So there's many different characters. You have characters with a hat on, characters with glasses on, and you have many different options. So for example, the first time when all these characters are still up, you don't really have a clue on what the character is. So what do? You ask questions, you start refining the options. Now, when you refine the options, you ask, okay, does your character have a hat on? No, it doesn't. Okay, perfect. I can take all the ones that have a hat on, I can take them away. And that way, once you keep asking those questions, you're only left with a certain amount of options. So when you then choose from those limited amount of options, that becomes a lot higher probability than if you were to choose from all these different options, if that makes sense. So that's also working with probabilities, essentially. Now we do the same thing. We do the same thing right here in trading. So for example, we have the option that we can retrace back into the daily value gap to then continue higher from it. But we also have the option that we are already going to continue higher. So we need to refine it. We need to either understand, are we already going to continue higher, or are we first going to retrace back into the daily value gap to then continue higher from it? Now the way we do that is through the following. So for example, we have this 4-hour fair value gap. That is also in turn 1-hour fair value area right there. Now, if the 15-minute time frame right here already starts to continue higher, starts to create these expansion phase candles right there, then we only really have one area that we can still continue lower from. And that is, for example, by sweeping this high. The sweeping of that high could still result in me losing this trade, where we now continue lower back to the daily fair value gap to then potentially continue higher, or we consolidate, etc., hits my stop loss, it takes me out essentially. But at this moment in time, since we've already shown intention right here to continue higher, and you could argue, well, you might have wanted to wait until we actually have an expansion phase candle above that high, so we can confidently say that we are running that high, so we can confidently again take away that option that we might be sweeping it to then continue lower. For me, the probabilities right here are perfectly fine in my favor already. This is already a high probability trade. And it's important. That's why I took this trade right here. So our job as a trader, so whatever happens, it is the fact that I'm recording this video right now. But if I wasn't recording this video, I wouldn't be staring at the screen. I wouldn't be staring at this chart at all. I would just walk away, try to get my mind off of the trade essentially. Now, of course, I still want to pay attention to the risk management, but it's important to understand that if there's no reason to stare at the chart, you shouldn't stare at the chart. The longer you stare at the chart, so the more I look at this scenario, the more price starts messing with me, starts going up and going down, the more I might want to close the trade. I'm not certain of the trade anymore. Now my emotions are getting involved. And when emotions are involved, you can't see clearly anymore. So I always like to think of, I think that's also, I love analogies. By now you probably have noticed. There's this saying, when you have boiling water, so when someone is getting angry, is high in their emotions, it's like boiling water. You can't see the reflection clearly anymore. You can't think straight anymore. It's the same in your mind. When you're high in emotions, it's like that boiling water. You can't see clearly anymore. The water doesn't reflect. So you need to wait until the water calms down and you can clearly think again. It's also, for example, a reason why you want to have rules. So you want to have specific rules when you are in a trade, because when you are in a trade, that's your most emotional state you're going to be in. So when you are in an emotional state, it is important to understand that your brain essentially functions worse. So you can't objectively make good decisions. Now, the same way, the longer your trading day is, essentially, the more decisions you are going to make. The more decisions you are going to make, the more decision fatigue you are going to have throughout your day. So what happens essentially, for example, if I have a very long day and I trade at the end of my day, in the morning, I need to make a lot of decisions. During the afternoon, I need to make a lot of decisions as well. Even to the tiniest detail, what am I going to wear? Now, of course, I'm not sitting here and saying to you, the decision of what you are going to wear has such a huge impact on your trading. No, but it's just an example that is also a decision that you need to make. So for example, what high performing entrepreneurs do sometimes is that they have their clothing ready. In some cases, they already know what they're going to wear. They don't need to make the decision because they have other decisions that they need to worry about. It's the same in trading. So then that decision fatigue eventually starts to kick in. Now, that's also why I personally, no matter where I am in the world, I prefer to trade in the morning, because that's when I'm the most fresh, when I haven't made a whole lot of decisions. I can think very straight. That makes sense. Now, back to the point on what I was saying. So right here, I took this entry. That's my job done, essentially. Of course, I need to still pay attention somewhat to risk management, but that's where I'm going to place an alert to walk away right there and simply don't do anything. But my job right now as a trader is essentially done. So what is my job as a trader? My job as a trader right here is to find the highest probability trade for my trading plan. That's essentially it. So if I find the highest probability trade, then my job as a trader is done. And then after that, I hand myself over to the world of probabilities, essentially. So I know when I find the highest probability trade ID, then I know it's very likely, or at least it's in my favor, that the trade is going to play out. That's not a guarantee. That doesn't mean the trade is going to play out, because we're still dealing with probabilities right there. It just means that over a large sample size, I'm going to have a certain edge in the market because the probabilities are in my favor. So whatever happens right now, of course, I would lie to you if I said it wouldn't do me anything if this hit my stop loss. Of course, I would be a bit like, it hit my stop loss. How annoying right here. I have to wait again for a new opportunity. After it hit my stop loss, I know I'm very aware of myself in the fact that after it hits my stop loss, or most means my stop loss or break even sometimes, which also of course stop loss, then what happens is I tend to seek another trade ID quite fast, and I tend to get very impulsive after that. I don't act on that impulsiveness. So whatever happens with this trade, to break even, if it's just a loss, a stop loss right there, if it's take profit, I don't do anything. I don't want to look for another trade ID right here. So let's see what Nasdaq wants to do right here. I've set my alert. Again, my job as a trader at this moment in time is done. So I don't need to do anything anymore. So right here, ever since the last clip, I've not walked away. I've been doing some things on my computer. Now, I've not necessarily been looking at the screen, but I have one screen sitting right there. On the other screen, that's behind the camera, essentially. That's where I have my MetaTrader. So I can see from my left eye side right there, I can see, okay, what is happening with my trade ID. Now, what I think is very important to understand is that that affects me. And again, like I mentioned a little bit earlier as well, it's going to affect a whole lot of people. It's going to affect arguably anyone who trades. But the thing is, how good can you control yourself? So when I started my trading journey, people told me you need to control your emotions. You need to somewhat get rid of your emotions. Listen, we're not going to get rid of our emotions. We're humans. We're always going to have certain emotions. It's about emotional intelligence. Let me pronounce that correctly. So the first step of emotional intelligence is by being aware of the emotions, by being aware that you even have these emotions and what you are feeling at that moment in time. So somewhat being conscious, not being a feather in the wind and just letting your emotions drag you everywhere. Now, I talk from experience when I say I used to be a very annoyed person. I used to be annoyed at the world. I used to be very angry. I got angry very fast. I was exactly like that feather in the wind, and my emotions just carried me everywhere, where someone would say the slightest thing and I would just get so angry that I would curse immediately, almost start a fight, essentially. Now, when I look back at that, with a whole lot of shame, in all honesty, because I'm not proud of that period. But I also look back at that period at this moment in time where I think, wow, I've gotten control over myself, over my own mind, over my emotions. So this emotional intelligence is, again, when you first are aware of the emotions that you have. And then next to that, it's the same as if someone was to curse at me randomly on the street, I wouldn't immediately start a fight. I have myself under control. I can notice, oh, I am angry. I would like to punch this person, but let me be the bigger person. Let me just not do it at this moment in time. That's the same in trading. So when I see that candle essentially forming, being painted at that moment in time, it's going up, it's going down. All these things go through my mind. So right here, I think, okay, well, was this really a good trade idea? We have this long wick against us right there. I'm not sure. That's looking very good. This is looking a little bit better. I start finding these minuscule reasons as to why I should be in a trade or as to why I shouldn't be in the trade. And that starts to affect me. That starts to affect me a whole lot, because then I start to think, oh, is it better to potentially close this? Did I enter too early? Was it not a good entry? Oh, it's potentially better to just hold it because we do have some momentum going for us right now. Again, these are things at that moment in time, your job is done. So as soon as you click buy or sell, your job is done. So I can notice these emotions. And that's the important part, because of the fact that I can notice these emotions, I can control them. That's the first step, is noticing the emotion. And when you notice the emotion, now you have some control over them. So what helped me a lot? Now, I currently don't do this anymore, but I do have a pen because I like to write here and there what I'm feeling, what I'm thinking. What used to help me a lot is that you simply have a journal. You can also do this on a screen, so just simply typing, but I don't know, writing always feels a little bit better, to me at least. But what you can do during your trading, and what I would advise as well, is simply write down how you're feeling. So for example, also record yourself. Recording yourself can help a lot. So I'm not going to sit here, record myself and think, well, I might want to close this trade right here, or I might want to now move my stop loss, so micromanage my trade, and then record myself doing that, doing the act. That doesn't make a whole lot of sense. It's like recording yourself committing a crime. When you know there's a camera pointed at you and you're talking to the camera, you're not very likely to commit a crime, because it feels like there's some accountability, like there's someone watching, even though it's just a camera. So talking, getting aware of how you're feeling whilst you're in a trade, that's very important to understand. And on top of that, what I also want to mention right here is that some people don't have confidence going into the trade. Listen, at the start, you're not going to trust your trading plan a whole lot. So usually what tends to happen is then people need to backtest and backtest and backtest to eventually gain some type of trust to actually start entering live trades, not financial advice. When you meet a new person, are you going to, now of course, it varies from person, the same as how you are affected by emotion also varies from person to person. But when you meet a new person on the street, are you immediately going to trust them? Again, if you're in your neighborhood, depends on the context, you might say, well, I do have some trust in those people. There's always going to be a baseline of trust depending on your traumas, potentially. So, for example, you're not going to trust that person with your money initially when you just met them. Now, unless it's a scammer pretending to be someone else, then of course that's why they pretend to be someone else, because then there's more trust to send them money. The same in trading. When you have a new trading plan, you're not going to trust that trading plan with your money. That trust, that confidence, that needs to be built over time. So you just need to slowly start building that trust with your trading plan. And the important part is, again, you build trust over the long term. So what is important is that from a trade by trade basis, so whatever happens to this trade, if this is a loss, if this is a winner, I'm still going to have trust in my trading plan because of the fact that over the long term, I know if these trades presented itself 100 more times, I would take them 100 more times, because after 100 more times, I would be profitable. Well, of course, not just after 100 times, I would hopefully also be profitable before that. So I trust the process, and that process is eventually going to lead me, for example, to a certain payout. And then once you see over the long term, hey, this trading plan actually works, that's where you gain a lot more trust, a lot more confidence. If you struggle with that, then my advice would be take some amount. Don't go into demo trading or backtesting, by the way. Not financial advice. I'm talking to myself here. What I personally would do. I wouldn't go into demo and I wouldn't go into backtesting. The reason why is because that's not real trust. Because then you're going to a live environment and you're still not going to have any trust. That trust doesn't carry over from demo or backtesting. Maybe a little bit, but not fully. That trust needs to be built in a live environment. And that is only where, for example, if I were to do it, I'm talking to myself, so not financial advice, I would take an amount of money that I'm fully willing to lose. I'm okay, already have the mindset, I am going to lose that money. Perfectly fine. I throw it in the bin, essentially. Then I'm going to, for example, buy a prop firm challenge with that money. And I'm going to slowly, with low risk, so for example, 0.5%, you can even do 0.25% at the start, slowly start building that trust. And I just look to execute the best trades I can possibly find. So constantly finding the highest probability trades. And that's all I'm essentially doing. And then over time, you will see you get more trust. All right, anyway, I'm still, you'll notice I'm constantly looking to the chart, back and forth to the camera as well. Still in its trade ID right here. I'm going to keep you updated. All right, hello. So as you can see right here, we are now getting very close to take profit right there. As you can also see, the alert actually went off. The alert went off when I was outside, when I was walking my dog. For myself, I also try to avoid as much as possible to look at TradingView or MetaTrader, for example, on my phone. Again, that's also just chart time. That's not really necessary. So the more chart time you're going to have, the more likely it is and the more susceptible you're going to be to do things that you shouldn't be doing. So silly mistakes. So for example, that's also the reason why I set alerts. Alerts allow you to essentially minimize your chart time. So to walk away, and once the alert goes off, only then you start looking at the chart again. Now the alert went off quite early. After that, I just walked away again. There was nothing, no real reason. So the alert went off when we reached above this high. There was no real reason or anything to go break even. So I simply left the trade open. It actually came quite close to my stop loss right there as well. So it swept this low to then continue higher again. And now it's nicely continuing its path right here. I am break even. So at this moment in time, it's a risk-free trade as well. So there's no real reason anymore to reach towards my specific entry level right there to then continue higher. Especially when we're already that close to our take profit right there as well. Now, you never know, of course, this could reverse right there to hit my stop loss instead of hitting my take profit right there. It would be very painful, but you never know. So after this, I'll update you and also give my full thought process on the trade and the full trade breakdown right here as well. The trade right here hit take profit. Now let me show you my MetaTrader as well. Here it is. This is my MetaTrader. You can see the arrows that I actually did take the trade as well. I also put something on screen right here. Now let's understand the full thought process of this trade right here on Nasdaq. Also understanding that this is just one singular trade and I'm currently showing you a winner right here, but this very well could have been a losing trade as well. That doesn't really matter. It was all about the process. That's the most important part. Again, also a reminder that we are working with probabilities. So in the past, for example, I've made videos on where I say, okay, well, this high is then the next likely target, for example, based on probabilities. And then I still uploaded that video, even though the target didn't get met. So I was wrong, essentially. And then I used to, for example, get comments about, oh, I'm surprised he still uploaded this video because he was wrong. That's not what trading is about. And if you think like that, then again, you currently have the wrong mindset about trading. Trading is purely about probabilities. So what is the most likely next thing to happen? And that's why this trade was taken, purely based on probabilities. So if we break this down, why are the probabilities right here in our favor? Now, before I also start breaking this down, the MMT got this breakdown even before it already happened. So it was broken down during the Thursday live session, the Thursday, the 26th of June, right there, the live session. We broke this scenario down fully before it even happened. And that led me also to take this trade right here. So we already talked about these different options that we have right here, as in we didn't necessarily know if it was going to retrace back into the fair value gap or already continued higher. We eliminated that. So we refined the options essentially by understanding right here that price was already showing us intention right here to continue higher. So price was already respecting fair value gaps, fair value areas towards the left, and already showing us that it wanted to continue higher. So essentially we are eliminating the option right there that we are going to see a retracement back into that fair value gap to then continue higher, where we were already going to continue higher towards the next target. Now, understanding the higher time frame here is the most important part. Even if you trade something like a Nasdaq and you're a lower time frame trader, because the higher time frame tells you everything. So for example, if we take a look at Nasdaq on the daily time frame, we see we have this fair value gap, that daily fair value gap. We have this 2-candle rejection high right there. Again, 2-candle rejection essentially tells us right there, okay, we are still respecting this fair value gap. So anything that happens below it is lower probability. Whereas if we run this rejection high right there, that means we are disrespecting this fair value gap. Now that means from this high right there, the rejection high, from the moment we run it towards the next targets that we have right there, it's what we call a no resistance run, but it's also what we call an area of opportunity. So I know very well right here where I want to look to get involved. Now, in complete transparency, I was not in the right state of mind for the past week right here, because I also missed a couple of trade opportunities right here. I should have actually gotten involved already a little bit earlier, but I didn't. So what I did afterwards is I simply waited. I waited. Again, what is important to understand, when I miss a trade opportunity, usually what tends to happen is that I get very impulsive. So I immediately want to start looking for a new trade ID to potentially make up for the missed trade that I had. Now, what is important to remind yourself of when you miss a trade, the best thing you can do is simply sit back and wait a little bit. Wait a little bit extra. Wait a little bit longer than you would normally do. Because again, usually you're not in the complete right state of mind to take another trade right there, because you're already emotionally affected by the trade that you didn't even take, that you missed. So what we see right here is on the lower time frame, again, once we start to respect these fair value gaps again, and we start to continue higher right here already. And the only thing we can realistically still do is we can sweep this high right there to then continue lower from it. But for me, at that moment in time, we already had enough. So all the arguments, all the options were already in our favor. That makes it a high probability trade. We have eliminated all the different options of what we can potentially do. The only option we are left with is that we can potentially still sweep that high to then continue lower. Now, I was not too worried about that because of all the probabilities we already had in our favor. Well, if we are going to reach, and let's use the replay tool in this case. If we are going to reach above this high and we're going to sweep it to continue lower right there, or at least we're going to have a rejection from that, so potentially not a full sweep, then this right here is the most recent fair value area that we have. So this most recent fair value area, that can still be respected to then potentially continue higher. If you go down time frame, you'll see this more clearly. So if we were to sweep it right there, we would still need to disrespect fair value, keep continuing lower right there to then target the fair value area low. So having a deeper retracement than what we see right here is not logical based on the concepts that we use. So fair value area, fair value gaps, etc. Now, you could also argue, well, you can also put your stop loss all the way at that low. And yes, that could be the case. But right now, you'll notice I'm entering on the 15-minute. This was somewhat of a day trade, right? If I now place my stop loss below that low and now target a 1 to 2 RR, it will turn into a swing trade. So I'm doing myself a disservice. Even though your stop loss might feel safer, oftentimes the safest option is actually to refine your stop loss a little bit. The reason why is because then if you refine your stop loss, your take profit is also going to be closer. So in that case, offense sometimes is the best defense. Now then after we start to continue higher right here and eventually I went break even. What is important to understand right here, the first thing I do when this hits break even is I place it in my journal and afterwards I stop looking at the chart and don't do anything anymore. At least not to try to trade again. So for example, here, the understanding is as well on Nasdaq, it's very likely, very high probability, not financial advice, that we are sooner or later going to reach that new all-time high right there. So I also think this is going to continue higher. But the thing is right there, for me, a 1 to 2 RR right there, that for me is enough, because I know over the long term, there's also going to be cases where I target, for example, very far, thinking that this can run, and then it comes back all the way to my break even, essentially losing the 2 RR right there. So after that, usually for myself, the best thing to do is just to take a step back, relax a little bit, and then potentially tomorrow or the day after or the week after, take a look at another trade again. See if something presents itself. All right, I have never in my life really made a video like this. So if you do enjoy a video like this, then feel free to let me know. If you don't enjoy it, of course, also feel free to let me know, but then probably you wouldn't have made it to the end of the video. And what I want to mention as well is that I have a lot of concepts on this channel, and I've basically covered almost anything. I think it's time to take a little bit of a different angle, and I think it's time to apply these concepts and show you how to apply them, how we apply them consistently, for example, within the MMT as well. Now, with that being said, I would also highly recommend checking out pipback.com. If you use Pipback, you can get paid for buying prop firm challenges. You get the highest discounts, but on top of that, you also get up to 8% cash back. You're going to save yourself a whole lot of money when you buy your prop firm challenges through pipback.com. Just for complete transparency as well, I am the founder of pipback.com. All right, perfect. Thank you.